It's not just the middle-class tax-paying citizens, but all investors and traders who are awaiting Finance Minister Nirmala Sitharaman to present her 8th budget. Remember, this budget comes at a time when there is enough and more global economic uncertainty, and Trump does not end surprising us every day with new policies and new talks on tariffs. Now, what is all this doing? This is all making the greenback, the US dollar stronger, and FPIs continue to sit on the sidelines. So today, over the next 20 minutes or so, we try to figure out what is it that the markets are expecting from Finance Minister Nirmala Sitharaman as she gears up to present her 8th union budget. Well, as I told you, there has been a downturn in the market. In fact, this is the 4th month. And if January also closes negatively, this is going to be the 4th month where markets have been down. Can Budget 2025 reverse this trend? That's the first question that we will try and find answers to on the show today. FPI outflows on a stronger dollar. This is something which has been paining Indian investors who are seeing their investments in the markets dwindle. Can Finance Minister Nirmala Sitharaman do anything to bring back the greenback? Now, we are also living in an environment where inflation has been sticky, it's been high. Inflation, especially on account of food prices, is something which is biting into the households of the middle class. Is there something that Finance Minister can do to tame inflation and hence kick off the low interest rate cycle? Now, as stock market investors and investors in mutual funds, can the Finance Minister do anything to make tax rates more appealing and try and offset the FPI outflow by bringing domestic investors back into the equity markets? Remember, domestic investors are still the ones who are the last people standing, holding the markets from falling any further. But can tax swaps really help offset the FPI losses and bring in more investors or similar investors with more investment volumes into the markets? Now, there has been weakness in the banking sector too, except for earlier this week when we saw that the RBI has injected fresh liquidity into the system, and that sparked a kind of rally in the Nifty banking index and banking stocks. But is there a case where Finance Minister would have to balance fixed deposits, which is something that banks need, versus equity investments, which is something that the market needs? Now, as part of inflation, there is also an impact on consumption, and consumption being muted is muting the FMCG sector as well. Can FM give more money in the hands of the taxpayers and reignite and kickstart what we call the consumption cycle, which is 60% of India's GDP? And there is also now talk on disinvestment and PSU stocks, which have been the darling of the markets for the last almost 2 years or so now. Can there be fresh conversation, fresh decisions on disinvestments and reignite the PSU rally? And low growth projections. Well, India expected to grow only 6.4% this year, and that requires Q3 and Q4 numbers to come in at about 6.8%. Is there something that Finance Minister can do to improve the outlook for FY26 when she presents her budget on the 1st of February? And is there going to be a balancing act that Finance Minister will have to do over prioritizing growth and balancing the country's fiscal deficit? And what about the market sentiment? There is hard data and there is sentiment. How will investors react on the 1st of February 2025? Well, if history is anything to learn by, then the last 7 budget speeches that Finance Minister has delivered has had mixed results on the market, and stock markets have reacted favorably to her budget speech only twice out of the last 7 speeches that she has presented. This time, markets are open on a Saturday, despite 1st Feb being a Saturday, which is usually a market holiday. But because it is budget day, markets are going to be open on the 1st of February. So, is Finance Minister's speech going to move the markets in the green territory, which has happened only twice in the last 7 times? Let's look at that data and let's look at how markets have reacted in the last 7 budget speeches. Markets have been in the red 5 out of 7 times and in the green just twice in the last 7 budget speeches. And of course, the maximum momentum we saw was on 1st Feb 2021, when markets rallied as much as almost 5% to reach the 14,000 levels on the Nifty for the very first time. Now, what is interesting to note right now is that today Nifty 50 is at levels which is even lower than what it was on the 23rd of July last year, when the new government came back to office for the third time and Finance Minister Nirmala Sitharaman presented her budget. Nifty was touching almost 23,500 level, 24,500 levels, and right now struggling to maintain even 23,000 levels or so. Well, joining me today are two very interesting guests who will share their views, their insights on what to expect from a market perspective from Finance Minister Nirmala Sitharaman. Mohit Gang, co-founder and CEO Moneyfront, and Gaurang, Shah, Senior Vice President, Geojit Financial Services, joining me this morning. Good morning, gentlemen. I want to understand from you, Gaurang, first. Last 7 budget speeches, markets have been positive and bullish on the Nirmala Sitharaman sentiment just twice. What are you expecting the story to be this time around?
Well, thank you, Kartik, and morning to all of you also. Primarily, the disappointment, Kartik, is because we all expect anything and everything out of the budget, despite knowing the fact that there is very limited that the government, the finance ministry, and the respectable finance minister, Srimati Nirmala Sitharaman ji, can deliver. But this time around, even normal budgets, I am the last person to expect anything out of it. But this time around, I have a slight bit of hope, and purely because of some couple of reasons. One is the slowing consumption. Second is the slowdown in capex. Third is slowdown in credit growth. Fourth is fourth is one of the important triggers why I expect this budget to be a little bit more than the normal budget, and that is the threats coming in from the global economy and the statements, as you rightly mentioned. Every morning, Mr. Trump gets up, he gets a dream in the night of doing something extraordinary for making the reality of MAGA, that is, make America great again. And he talks about tariffs and he talks about restrictions. He tells Saudi Arabia and OPEC Plus to cut crude oil prices, etc., etc. And this is just the beginning, Karthik. We don't know what is going to come next for the remaining years that we have to face him as the 47th president of the United States of America. So I think these challenges that are there will possibly, rethink the strategy in the budget. Of course, there are not many days left, but I think it would have been already done since he was sworn in as president on 20th of Jan.
Yeah.
These are the basic things, other than, of course, your defense, infrastructure, power, railways, and of course, real estate. So my thing is that to push consumption, I think there will be some positive for a common man in terms of reduced tax slabs. I'm not saying that will make the markets turn around overnight, but at least that will be a positive sentiment.
Okay, Mohit, let me bring you into this conversation now. So we know that there has been an exodus of foreign capital. There's been a flight of capital from Indian markets, and all this, what we call a weakening rupee, is actually the strengthening dollar. Is there something that we can do at the reforms end? Is there something we can do by bold policy moves that investments into India come back, and investments by way of foreign direct investment and setting up plants and factories and manufacturing in the country, and that indirectly will also have an impact on the dollar, in fact on the rupee strengthening this time around, and overall bring the greenback back into the Indian markets?
Hi Kartik, morning. And look, honestly, I think this time around, the good part is that everyone around is expecting very little to happen from the budget, right? We are entering the budget with least of expectations. And my sense is that's when you possibly might just get a little bit of a surprise uptick, right? And as I think Gaurang rightly said, that the two key factors to be looked out would be the infra spending and the consumption part of it, as to how government kind of tries and propels these two sectors, which can really kickstart the sagging economy. On the rupee front, per se, I think, look, the fiscal deficit glide path which the government has been adhering to very prudently. Honestly, I think that has to follow, because from a long-term perspective, that is something which will give more strength to Indian markets and which will give more strength to the overall economy. The second part is, I think if you really need more FPI money or FDI money to come into the country,
Yeah.
you have to kind of simplify the processes, the reforms around the taxation part of it. The
Right.
gift city proposition has to be made more robust and more strong. And more importantly, the PLI scheme, Karthik, I still think that's something which is extremely attractive. Government has to cast the net wide and far, has to increase number of industries which are kind of availing the benefits. There are many industries and there are many examples quoted very often where we find that the PLI was offered but the industry hasn't adopted to it
Right.
to a large extent, right?
Right.
So government like really get into the nitty gritties of those and extend this PLI mechanism. I think that's the perhaps the biggest way where we can attract a reasonable amount of FPI money in the
I
economy.
agree. I agree with you, Mohit, and I believe and data should be able to support my argument. But I believe that there are some critical sectors like electronics manufacturing in which we have seen great results when it comes to the PLI scheme. But then there are other sectors where we haven't seen as much traction, as much momentum. But I want to refer to a point, Mohit, that you had just raised some time back, and I want to take it back to Gaurang Shah. You're talking about government trying to contain its fiscal deficit target and really achieve that. I want to understand from you, Gaurang, that does it make sense for the government to try and balance, or should it rather prioritize GDP growth versus fiscal deficit? Is it a good idea at this moment to give that push to consumption by way of cutting taxes, giving more income in the hands of people, rather than being fixated on this almost 5% fiscal deficit target that, come what may, hammer and tongs, you're going to go after fiscal deficit, collect more taxes and cut down deficit? Is deficit really as bad a thing as it is made out to be?
So we've been able to maintain discipline on the deficit over the last 2, 3 years. If you see the number,
Yeah.
Kartik, and in an economy like India, which is a growing economy, I think the government can possibly take a little bit of more aggressive stance in terms of pushing for that consumption, pushing for the GDP growth rate. The best part of our country is the population that we have, 140 crore and counting. And consumption is definitely going to support the economy. And that possibly reduces the dependency on the global markets as well, given the kind of consumption that happens. So my sense is that, we are in a comfortable zone or level as far as the fiscal deficit is concerned. I think the fact that we gave priority to fiscal discipline in earlier budgets,
Yeah.
this time around, I think we can take that little bit of leeway and
Right.
give push to consumption, cut tax to a certain extent, and give that benefit to the common man.
Okay, so Mohit, what is that going to mean for FMCG stocks, and what is that going to mean for even the bigger purchase items like consumer durables? If there is more money given in the hands of consumers, can we see some sort of a rally in the FMCG stocks, in the consumer durable space, in the auto space? And do you think any of these measures that FM may take, we still don't know, we are still away from the budget speech announcement, but in case what people are asking for, a tax cut, maybe the nil tax to go up to about 10 lakh rupees or so, the rally that it may or may not spark in FMCG, in auto sector, in consumer durables, is that likely to sustain given the overall GDP growth outlook being muted?
That's a very valid question, Karthik. Honestly, look, I think the monetary policy is not so much in the hands of government.
Right.
We've perhaps been a little late on the curve in terms of loosening the interest rates out there, and that's kind of hurt the economy a little bit. The fiscal strings are in the hands of the government, and look, I think there is no harm in going a little loose on the fiscal side. Honestly, if you want to revive the animal spirits in the economy,
Right.
so government will have to take that calculated call. It's just that too much of freebie and too much of spending around the election times is kind of disrupting the state government budgets and is overall hampering the overall deficit levels, the state plus center combined in the country. So I think there has to be some checks and balances out there. If that can be brought in, then I think a little bit of fiscal leeway can be provided in the economy. As far as consumption is concerned, Karthik, look, reducing tax rates might spur some amount of growth, but I really doubt as to how much is in the hands of the FM right now. She can definitely go all out and perhaps raise the lower tax threshold, or maybe give some, I don't know what kind of reform it can be, but maybe let's say the capital gain exemption limit is 1.25 lakhs a year, the
Yeah.
LTCG limit, right?
Yeah.
She can perhaps increase that to 1.5 or maybe 2 lakhs to
Okay.
give a little relief. But I don't think so that can materially impact the consumption story. Something will have to be done at the grassroots level to spur more consumption, to perhaps revive the agri sector, and to pass on, maybe the Manrega budget has to be increased, right, to
Right.
pass on more money in the hands of rural population so that the spending prowess can again come back, right? So
Right.
I think they will have to come out of the box this time around. Just simply tinkering with the tax slabs might not help, and perhaps FM might not go that way,
Okay.
for all I know.
Okay, so Gaurang, interesting, conversations that we keep having, every time we invite gentlemen like you over on our shows. And unfortunately, when an MPC meet happens and we see that the rate has not been cut, we come back and say that, hey, inflation is high because there is food inflation and there are oil prices which the MPC cannot do anything about. So it has to be a fiscal lever that has to be pulled to tame inflation. And then when we are close to a budget, we believe, hey, maybe even the finance minister doesn't have too many levers in her hand. So eventually, do you think instead of all eyes being on finance minister, all eyes should be on Donald Trump? And is he the only person who can actually hammer down oil prices?
Here again, Kartik, I think we end up aping what the rest of the world does. Uh, Powell cuts rate, and we expect MPC and RBI governor to announce the rate cut next day morning before the markets open up. But there is again, a very, very limited thing that we can do. Rate cuts. Okay, we have a date with the RBI on 7th of Feb after the
Right.
budget 1st of
Right.
Feb. 7th of
Right.
Feb is the credit policy.
Right.
After what has happened as far as the OMOs is concerned and injecting liquidity, there is again a talk, Kartik, that this is maybe the first step towards a rate
Towards a
cut
rate
on
cut.
7th of Feb.
Right.
So why build up hope and expectation? Yes, we do need rate cuts, but I think one of the most important and priority for the MPC, RBI governor, and for the economist, it is very important to see where the inflation is.
Okay.
We can't afford to play around with rate cuts just because the rest of the world is doing it. And
Right.
yes, crude oil prices, like you rightly mentioned, is something that is core to the inflation number because we are 75 to 80% dependent on imports of crude oil. Yes, we have Russia and Iran, but we also buy crude and natural gas from the rest of the world.
Right.
And we have to pay in dollars, Kartik. That's the biggest problem. When
Of
we
course.
do it with Russia and Iran, it's in domestic, local dominated currency.
Right.
So, if crude oil prices are, 80, sub 80 levels on Brent and NYMEX, we don't go and shoot beyond $90, then we are in a safe zone.
Right. Okay. Mohit, let's bring you back in. Now, there is, while we are discussing the possible reaction on budget day of the stock markets and how markets are going to react, at this point, is it fair to assume that markets are already factoring in a status quo and there isn't too much hope on the budget and hence there is limited buying activity at the moment? Number one. And number two, with 4 months of decline in the markets, in fact, Nifty 50 at levels almost 1,000 points, more than 1,000 points lower than what they were on the 23rd of July when FM presented her last budget. Is it fair to assume we are in a bear run already, or do you think we are not in a bear run and this is just a momentary macro global environment awaiting budget sort of a momentum we are in?
Interesting thing, Kartik. Look, I think one thing is for sure, we are entering the budget day with the least amount of expectations. And honestly, I think personally, my take is there's very little in the hands of the FM unless she really goes all out and opens her purse. Which, given the focus of this government, I think it's difficult to imagine that they will really go all out and loosen the fiscal strings, right? I think the world is more revolving around US markets right now. And whatever Trump is saying, I think the entire globe is following a single piece narrative as to what is happening in the US. The tariff chatter, the AI chatter, whatever Trump is trying and imposing, everything is revolving around that, right? So I think there's very little which the Indian budget could, in this moment, do to revive the market, to revive the economy for sure. Markets and economy are two different things, and I don't think so. FM will be focused more on the markets, but she is more trying and channelizing her energies towards the economy
Right.
per se.
Right. Okay.
From that perspective, yeah, I think there's very little with the FM can do.
Okay. So, Gaurang, you started off by saying that you are not expecting anything much. In fact, the markets are not expecting anything much from the budget. So, I want to bring the question that I asked Mohit now onto you, and I want to understand from you, are we in a bear market, and is this the bottom, or is there worse to come, given that the budget may not have anything which will directly impact the market? It may impact the economy, like Mohit was saying, but nothing in it really for the markets. If that is factored in already, are we at the bottom of it already, or is this a bear run and we are going to continue losing money?
Well, I hope I had a crystal ball to gaze into and give you an answer, Kartik, to be very honest. But
No,
let me say this again.
but with your
Yeah.
experience, with past data, with what you are seeing, with how you are analyzing, with how you are managing investments of your clients, what does it seem like? What are the bets that you are factoring in at the moment? Is there going to be a downside? Are you hedging against a further downside? What is the sentiment really for managing investments right now?
Okay, so firstly, when I said I meant I personally don't expect anything from the budget, and
Okay.
I've left that couple of years back.
Okay.
Markets does expect, Karthik, let's face it. Now,
All
coming
right.
to your question, we've seen closer to 14% correction after what we saw, what happened beginning this week.
Right.
14% correction, Karthik, is nothing to compared to what we've seen in the past in the market. So what are we crying about? I don't think we have any reasons to complain.
Okay.
We were used to higher double-digit return for the entire calendar year 2022, 23, first part of calendar year 24 from Jan to September. And then from
Correct.
October last year, we saw what has happened, and I think the FIs have sold.
Right.
Whether we go down from here, well, I normally don't look at technicals and levels, but one level that was interesting to me to look at on Monday was whether we are able to recoup from the lows of sub 22,800 on the Nifty spot, and we very well did that. And why 22,800 becomes very, very crucial is because before we crossed over to 22,000, crossed over 22,800 and went to 23,000 and eventually made an all-time high of 26,277.
Yeah.
We spent almost 1.5 months or 2 months between that 22,300 and 22,800.
Right.
So this becomes very crucial. If we do break that, then I think the downside opens up to maybe 22,300, 22,500. From there on, I think we could possibly stabilize. I think the word I should use is stabilize. Don't
Alright.
expect recovery, but let's expect stability. India VIX crossed over to close to 18, I think,
Right.
day before yesterday or yesterday.
Right.
We need to see this down to maybe sub 13 levels, and we need to see some kind of cool off as far as FIs are selling numbers are concerned.
Okay, and final word to you now, Mohit. What should investors do? Investors who are sitting on their investments. See, I understand, and most financial advisors like yourself would say that, you know, when the markets are down, it's a good time to buy. But when you don't really know whether you are in a bear run or a bull run, and you don't know how sentiments will run havoc depending on what happens in the world, not just in India, which you still have a clearer idea of. What should investors do at the moment? Those who are already invested, have been invested in the long term, and those who are sitting on the fences and waiting to see whether they should put their money in the markets at all or not?
Look, Kartik, I think a generation of investors which have come into market in last 10 years haven't seen a negative calendar year, right? We have run 9 consecutive positive calendar years. And perhaps the way we have started, we might just end up again being a positive calendar year, though that might not mean great returns in the market per se, right? So whole generation hasn't faced a reasonable correction, right? 15 to 20% kind of correction on the headline indice levels, and a little more on the stock level is now starting to pinch, basically. So what should new investors do? If you have money lying on the sidelines, waiting for a market correction, then this is the time, Kartik. Honestly, this is the time for next 3 to 6 months. I'm not saying go all out, go all in right now, right here. But for next 3 to 6 months, you have to carve out tranches and just keep investing into good quality stocks, or let's say good quality mutual funds, basically,
Right.
wherever you think your money is worth it, right? But next 3 to 6 months, you make the most of it. And if you're already fully invested, honestly, 20% down the line, as in after having faced 20% kind of a correction, my sense is just sit tight, hold your positions, just try and see whether your asset allocation is right or not. If you're over leveraged to equity, perhaps you might still want to tweak it little towards fixed income. But if your asset allocation is right, then hold your positions and just sit tight and wait for the markets to give you a better opportunity. Honestly, I won't ask anyone to right now jump in with a huge pot of money. Lump sum investments is not the thing to be done right now. I think
Right.
next 3 to 6 months, one has to wait and watch.
All right. Well, 3 to 6 months are going to be critical. The word coming in from Mohit gang that if you're sitting on money, then this is the period of correction up to the next 3 to 6 months, and put your money into the markets. And if you are already all in, then sit tight and don't exit the markets just as yet. Well, on that note, Gaurang, Shah, Mohit gang, thank you so much for joining us right here on the budget special. Well, with that, it's a wrap. Thank you very much for watching.